Hey guys, I wanted to make this video to basically, I could have made it into a short and posted it in the Discords, but I wanted, everyone to be able to understand my thought process when I say the following sentences. So, when the market's in an uptrend, and we will talk about the different types of factors that go into this, but when the market's in an uptrend and we have rips and deciding when to buy them, right? Even if you're expecting a pullback, there are a few things to consider. So in this example, I'm going to be going over Fartcoin because this is one of the coins that, went parabolic. Everyone was trying to chase it, or everyone wanted a dip to load up, but if they had just exposed themselves in positions, buying a market entry and then DCing on the way down, they could have at least made some profit in the event that, their bias was wrong and it never actually pulled back. So let me explain what I mean by that. So we have, let's actually go back to here. Okay. So if we're taking a look at Fartcoin before it ripped, all right, we see that it has based down or based out right here and then started a new trend. And, it put in its first higher low before it continued ripping. Now, this is still, down tremendously from its highs at this point. You have a clear resistance, basically a clear resistance level here. Okay, and then let's say we had this breakout. Okay, now, yes, this is a daily candle, and once we closed above here, everyone wanted to bid this retest point. Well, it never came. So how do you combat that? And I'm talking here for spot traders, right? People that are specifically sidelined and are wanting to get exposure, whether it's in Bitcoin, Fartcoin, whatever. So first of all, you never want to buy a rip like this, okay? And if you are going to buy, you buy in with specific um, allocations. So how I like to play it is when we have a rip like this and I'm expecting a pullback, let's say, I want this bid and so did everyone else, it's okay to market buy with a little bit of exposure. But the reason for that is we may be at resistance when you are doing that. So in the event, like right now, we are at clear resistance here, right? So sometimes we have to buy resistance when a trend is turned bullish, right? We want to buy resistance because we think it's going to go higher. So Fartcoin here ripped, okay? See how we had this resistance? Well, if I had bought there and let's say we DCA'd a little further back, we see that we had clear resistance here, and this became an SR level. So buying um, a tiny portion with the hopes of it pulling back to levels that we can buy. In this case, it was previously resistance. It became an SR level. We came back. We flipped this previous resistance into support. And let's say we DCA'd there. All right. That is one way to get exposure. So you bought at resistance a little bit. Let's say you have $1,000 that you want to allocate into this trade. Let's say you buy in with 20%, and let's say at levels you are waiting for a dip to happen. So let's say we bought in 20% here, we're waiting for another 20% here, and then another final 40% here. Well, you're in with 20%, got DCA, you're 40% allocated. The final bids never filled, right? We got a breakout. Well, got the breakout. Now you have to shift your bids. So the lower bids, usually, you can shift them if you want to add more exposure. You know, this dipped, and let's say you got these 40% filled, you're up at the highs around 28%, right? But then we're going to shift it a little bit. And let's say we shift these lower bids into previous resistance, which is here. So now we want to add a little bit more here at this red line. I don't know if we've got it. See, there we go. You just have to have a little bit of patience. Everyone wants to buy rips, but if you wait for levels to hit, then you would have gotten some bids filled. So let's say you shifted this 40% to here, right? And now you have more fart coin around most likely the same average, right? And as this goes higher, you're making more. You didn't get a full allocation, right? Because you had this one, or sorry, this one miss. So you shifted your bids up, and then from there it continued going. Now, the reason why we want to buy incrementally on the way up and DCA on the way down is for this reason. Let's say we just continued to rip from here and then continue to go higher. So we never actually got the DCAs, right? At least you were 20% exposed in the markets before this had its run up, right? If you are buying on spot, you can't be afraid to be in the red for a little bit. But you also have to keep a few things in mind. You have to be able to consistently adapt to market changes, meaning if this is going higher and higher, as evident on the daily, we're just making higher highs and higher lows, right? You just keep buying the higher lows until it fails, until market structure has completely changed. And then, let's say we fail to make we make the higher high, but we fail to make a higher low, right? We have broken market structure. We go and make a lower high. This is where you sell. You won't be able to catch the top, but at least you'll be able to, realize the profits that you made without giving more up. And if you ever want to get back into it, you just bid those high time frame levels. So keeping market structure in mind, along with not chasing and consistently adapting to the markets by shifting your bids up, is how you are going to make money if you missed this whole entire move. All right. You don't always have to get the bottom, and this is the one mistake that traders make is they try to full clip or get full allocation, you know, on just one entry instead of, getting exposure, even if you still think the market's going down. Because if you think we're eventually going to go up, what does a few percent actually, have, um, like, what does a few percent actually mean to you in the long run? If you, buy here and, if your bids were here and it never filled, right? This extra 3% that you missed and then you watch the coin continuously run up, that extra 3%, that opportunity cost you a lot of money on the way up. And that is one of the fear that traders must, not just traders but investors, whether you are a long-term investor or a trader, you must be able to be okay with that feeling of being in the red for a little bit and being happy actually about going lower and filling your bids, um, and then we go higher. Now, a very, very strong example of this again is going to be, here on Fartcoin, for example, um, or even Bitcoin here, right? Everyone wanted this 73 or 74K retest. We came down here to, lowest around 74.5K. Just because you were waiting for an extra $800 dip, you missed a 25% move up, right? So if we had this huge move to the downside, and let's say, you actually started buying at 78K, right? And you had, maybe lower bids around, 76K, 74K, 73K. Let's say this actually never came back to these DCAs, but look, at 78K, you got a 12% move up. You could have always added there, and in this case, we never had a bullish market structure, so we made another lower high before coming back down. Now, you got your 76 bids, you got your 75 bids, 74 bids, or whatever you had, and now you have, full allocation. Maybe you have some bids down here waiting, right? But at least you got some more bids filled, and then a heavier size, um, and much more, profits on the way up instead of full clipping everything at 73.7K and hoping to get the bottom, all right? So as traders and investors, we must shift our mindsets and be okay with that move down. And even if we think the market's going to go further down, it's better to be exposed a little bit and DCA further than, like I said, just waiting for a full clip. All right. So going back, I would suggest understanding market structure and consistently and constantly adjusting bids higher and higher if we continue to break resistance, um, and understanding you know the psychology and the importance of slowly DCing on the way up or on the way down. And my final example of this would actually be Bitcoin on lower time frames. Okay. So let's say you were waiting for, we're at resistance here, and you were waiting for these bids to be filled. Okay, so 83.1, 81.2. Well, if you had bought some here, right, and then we had this monster move up, then you could have bought or shifted your bids from down here. Let's say you wanted to buy this retest, right? We had previously resistance here, right? We broke out, we retested. So not only were you able to get exposure, but you had this breakout, you had this retest, it brought your average a little bit higher, and that's totally fine. And then now, let's say, we're waiting for a pullback, and if you think the market's going higher, structurally, we're in an uptrend. We have broken down from a 3-month downtrend and making higher highs and lows. Well, if you think that we come back down and make a higher low in this area, well, you'll get this bid, or if you want to bid here, you'll get that. But you never want to buy rips immediately into strong resistance for the first touch. I recommend buying resistance touches or multiple touches, right? So buying here made sense because we had about like 6 or 7 touches of this resistance, and the more and more we touch either support or resistance, it's most likely going to give out. So buying there made sense compared to, buying fresh resistance down here or up here, right? It's our first touch. It doesn't really make sense. It makes sense to buy bids or buy pullbacks here. But again, if you aren't exposed over here, it's okay to buy gradually and start DCing on the way down. And then at that point, you have your invalidation, right? When market structure turns bearish and lower lows are put in, lower highs are confirmed, then you could sell for a small loss instead of holding it. All right. So um, if you are a trader, if you are an investor, you have to be able to adapt to any single market condition and either sell for a loss before it becomes a bigger loss, or be able to consistently move your bids up and be okay with being underwater for a little bit, and be okay with having some exposure in the event that your bias is wrong and markets continue to go higher. All right, so this isn't really a technical, analysis video. It's more understanding, trading psychology, revolving around having exposure to the market in the event of directional bias.